Crude oil is likely to encounter challenges in 2025, with many analysts predicting a bearish market driven by increasing non-OPEC production and sluggish demand growth. While there is consensus on a well-supplied market, opinions differ on the severity of the downside risks. Some forecasts suggest crude oil prices might stabilize in the high $60s, whereas others caution that a sharper economic downturn might push prices below $50 per barrel. In December, OPEC opted to postpone easing its 2.2 million BPD production cuts until April 2025, aiming to curb supply growth. However, some analysts suggest that rising output from the US, Brazil, and Guyana will keep the market oversupplied. The IEA projects a 950,000 barrels per day surplus even if OPEC maintains current production levels throughout 2025. Should the cuts begin to unwind in April, the surplus could climb to 1.4 million barrels per day. While the consensus leans toward a bearish outlook, some analysts anticipate sharper declines under certain conditions. Prices could collapse below $50 per barrel if a perfect storm materializes. This scenario might include a significant economic slowdown in China and Europe, rising trade tensions, and increased U.S. production. They also point to OPEC's spare capacity as a critical risk factor, likening it to a coiled spring capable of releasing additional supply. Other analysts warn that sudden economic contractions in major economies could drastically weaken demand, potentially driving prices below $50. They note that OPEC's capacity and the potential for U.S. shale growth could exacerbate the situation. However, they underscore that this represents a downside risk scenario, not the baseline expectation. In contrast, investment banks offer a more moderate outlook. A Reuters survey projects WTI crude to average $71 per barrel in 2025, based on expectations of modest demand growth and steady supply increases keeping prices in check. Saxo Bank highlights Chinese stimulus as a possible stabilizing influence, though analysts warn that ongoing US-China trade tensions could counteract these benefits. Overall, while the majority of analysts predict a bearish market, the extent of downside risk remains uncertain. The baseline projection for 2025 places WTI crude in the high $60s, but traders should stay vigilant to economic and geopolitical shifts that could drive more pronounced price drops. Wishing you happy holidays filled with joy and warmth. Please like, subscribe, and comment to support the channel. See you in the next one.